All right, 7:07. All eyes on Wall Street again yesterday. The S&P closed. The S&P 500 closed at 2,329, making the total market cap of the index over a whopping $20 trillion. So stocks have been rallying for weeks. What does this milestone mean? Well, Tom Stockett is with us from Cleveland Wealth, our financial professional. And Tom, good morning. Happy Valentine's Day to you.
Happy Valentine's to you.
What does this, should we be saying that? Yeah, I don't know. We're good friends.
Should probably be giving a shout out to my daughter, Farah, my wife.
Very nice, very well done. Way to recover for me. Well, we're friends, Tom and I. What the heck?
Go way back.
Yeah, we go way back. All right, so Tom, what does this mean? The S&P at 20 trillion. What is the S&P, and why is it important to us?
Well, the S&P 500 is the leading indicator American index on U.S. equities or stocks, and it's made up of the 500 largest large cap stocks listed on the New York Stock Exchange and the NASDAQ. And it's really the barometer that investment professionals watch regarding the U.S. economy and the markets abroad in general.
What's causing this recent run-up that we've seen on Wall Street? Some people were nervous about the election, before the election, and after the election.
Absolutely. Well, there's two things. One being coined the Trump trade. We're up almost 8.5% since November based upon the incoming administration's potential policies being enacted with regards to corporate tax reform, deregulation, and a potential infrastructure stimulus package. But let's not lose fact that the economy is improving. We're on track for potentially the best profit growth in 9 quarters, and we are seeing unemployment tick down in general.
And we've talked about this before. If you've got a 401k, you should be paying more attention to what the S&P does rather than the Dow, because that's probably a greater indicator of what your 401k should be doing. Why is that? And what should we be doing with our 401ks right now?
So first off, the Dow's made up of 30 stocks, and it's price weighted, so it's not the greatest barometer regarding how the economy's doing. S&P 500, 500 more than 300,
right.
It's a much broader view of it. What should we be doing right now with our portfolios? So it's a great time to understand what we own in our portfolios, looking to rebalance, make sure that our diversification between equities and bonds or fixed income is in order, giving our risk tolerance and our age. Honestly, clients that are getting close to retirement, it's very important to get ready for that stage and start to de-risk. But for our longer term investors, stick to that good financial plan going forward. Stick with it with the long haul, and I can't say it enough, Brian, save. You say that to me every time I see it. Hard to de-risk, as you call it, when 401ks are up 11-12% for the year 2016, like a lot of them were. Well, investing is
crazy numbers.
Is an arena that I say that you can be thrown around by fear and greed. So
right.
We got to stay on track here and be smart and continue to diversify our portfolios.
All right, good advice. Thanks, Tom.
Thank you.